Hello, my name is Tim Gregory. I'm from Vermeer Investment Management, and I'm here to talk to you today a little bit about where we see earnings and the impact that they're having on the market and some related issues to that. First of all, I hope that everybody is safe and well and that friends and family are also okay at what are challenging and absolutely extraordinary times. So far, we're through a part of the earnings season which started with the banks that had reasonable results, although markets didn't react particularly well at the time, as they clearly highlighted just what a difficult outlook banks face in a number of ways and how the economy has been impacted by the economic shutdown that's followed the outbreak of the global pandemic coronavirus. We can see how bank shares offer optically good yield support, and currently most of the bank companies are saying that they will continue to pay dividends, and we think dividends are going to continue to be an important part of the market. And there's no doubt that banks are in a stronger position than they were in 2008-9 when we entered the financial crisis. This has been, of course, a medical crisis, not one that came out of the weakness of banks' balance sheets that came from that crisis. So the situation is very different. And one of the things that's clearly helped is Federal Reserve policy to make sure that corporate bond markets were open. In 2008-9, bond markets were very closed and banks' distress was increased by that. In the early part of this crisis, we did see a situation where many companies drew down their revolving loan facilities, and that was pushing a strain on banks' capital. However, that has paused as the Fed have been able to get bond markets open again. And that is really a help, we think, going forward for markets as a whole and for the banks specifically. One of the other things that we've noted from the results that we've had from many different types of companies is how remarkable the transition to a working from home environment has been for many companies. Companies have, in many cases, pushed all their staff to a work from home situation. And it illustrates just how easily and well their business models have adapted, that technology has shifted so much and changed things. And we think this is going to have an impact on the future. We think commercial property may be affected by that in the longer term. We think business travel will take a very long time to recover from its previous levels. And these are ways in which companies will seek to save money in what is going to be likely a challenging environment for some time ahead while economies recover. Hotel occupancy may be another area that is affected by this in the longer term as companies look for all possible cost savings that they can. It's really too early for us to tell for certain how many of these trends are structural and how many will just be a period while we're in this transition phase of the economy. But it's our view that some of the changes that we're seeing will be permanent and that people are likely to work from home many more hours than they have done in the past. And that will cause businesses to review their operations on a long-term basis. And it's very interesting to look at some of the companies that are going to be the benefit of this and obviously to be careful about those companies who may be affected negatively by this as well in the long term. That's all I have for you today. I hope everyone is safe and well and that you're able to stay safe. And I very much look forward to speaking to you again in the not too distant future. Thank you for your time.